Hello everyone, we are starting our practice session. Hopefully you still have some, energy to do practice, and the practice should be a bit more interesting than the pure theory. So let me check, let me know if there are any quality issues. Looks like the sound is okay, and um, everything else is pretty much okay. Let's see. Let me check. So if you have quality issues, you just need to select 720p quality, and that should be good to see enough. I will still keep it low here. Okay. So cash flow statement. In this practice session, we will continue our work on our homework files and transactions, and we will prepare cash flow statements for period 1 first using the direct method, and then if we will have enough time, we will do that using an indirect method as well. So here is a link to my, let me give you just a link to homework folder if you need it. This is a link to homework folder. This is the link to schedule. I believe it's useful for everyone to check the schedule from time to time and to check if they remember anything from our past sessions. But let's dive into cash flow statement. We already know from the guidance that we need to separate our cash flows for operating cash flows, investing cash flows, and financing cash flows. We know that we have like a sample headers, sample captions in the audit guide, and if that's not enough, we can go research some public companies and see what they put in their cash flow statements, just out of curiosity, or if we really need that. And our first exercise is direct method of cash flows. And the way we build it, we will build it using sum ifs and lookup sum ifs formulas depending on what we need, and we will build it directly from transactions. So let's start here. Let's do a bit of formatting so that we are not messing up anything. Okay, I move that one here. I hear that my kids and my wife are back, so we might hear some background noises so far. So let's start. Period 1. Okay. So let's see. Let's see where I have a classification here. I will probably I will probably go this way, and I will insert a column and say cash flow classification direct. So what our exercise will be? We will go through each debit and credit of cash, and we'll allocate the debit and credit to either investing activity or financing activity or operating activity. Okay, so that is cash, owner's fund. So we go here, and we already done that part. Owner's contribution or proceeds from issue of shares. Okay, so that is straightforward investing activity. Now, to see that we are doing everything correctly, let's do sum ifs formula already. Sum ifs transaction list amounts, comma, then we will look up account, comma, we will look into that caption, comma, and then we will check periods. Let's see. Transaction list, and we have periods in that column. Okay, comma, and here. And we need to fix all our columns. So when we copy this formula around, nothing will move the way we don't want to move it. And we need to fix row here and fix column here. Okay. Okay, we had success with an owner contribution. Now let's move further. We have that investing transaction here, and that's a tricky one because we need to apply our judgment to determine if acquisition of that building was acquired with the seller's funds, or is it financed by a third party. So if we take a look at the guidance, so that's a big pitfall here. Let me try to find it. No. Okay. FSP Corporation acquires computer equipment for 100 cash and 400 installment note payable. So, payable to the seller. In that case, $100 will be cash payment and $400 will be non-cash investing activities. Alternatively, if $400 was borrowed from a third-party lender who agrees to distribute the funds either to buyer or to the seller, the loan would be a financing cash inflow and the full purchase price of the equipment would be an investing cash flow. And for our case, just to make it more interesting, let's say building mortgage. So mortgage usually is a third party financing. So we based on analysis, we will reflect gross numbers in our we will have to reflect gross numbers in our analysis, and that's make it complicated for the usage of the formula, because okay, let's call it, first of all, let's call it building acquisition. Let's say just building. So we need to be very accurate here. Then we will copy that building acquisition to here. Okay, then we will copy formula. And as you might already note, so this is cash outflow. We need to make some common sense test or logic test to make sure that this is, we use the right sign for that transaction. Okay, and now we need to let's call it proceeds from for the practice reasons, let's be very detailed. For the practice reasons, let's be very detailed about that. So here it is, proceeds from mortgage. And if we just copy a formula, it will be with a minus, but we need it to be with a plus. So we need to be very accurate with the signs. So far, what do we miss here? We miss inventory merchandise. And let's call it, what do we have here? Cash paid to suppliers. That's good enough. Yeah, as you can see, usage of lookup and SUMIF for these transactions is not ideal. Is definitely not ideal. Cash paid to suppliers. Let's see how much of period 1 transactions do I have here. Not okay. Cash paid to suppliers. And let's move the formula here. Okay. 70,000. What's going on? Okay, again I messed up with the sign. Minus 20,000, 30,000. Okay, let's go to our third transaction. So this is reclassification. It doesn't apply. It's total not cash, doesn't apply to our cash flow statement. Okay, we bought equipment for cash. Again, equipment acquisition. Let's go here and call it equipment acquisition. And for our equipment acquisition, we use this formula and we use that caption for mapping, and we use the one where we have credit cash. So basically direct method of cash flow statement. You just go through your transactions and you pick debits cash and credits cash, and you classify those debits and credits for cash into your operating, investing, and financing activities. Let me just sip a coffee. Does anyone of you have experience in cash flow statement preparation? If you're online, write me to the chat. If you are watching the recording, put it into the recording comments. Okay, so now we have acquired the equipment acquisition for cash. Equipment acquired for 2,000. Under our accounting policy, we treat equipment of less than 2,000 value as an expense. What? Okay, Okay, so basically I have an expense here. So we credited cash, and so because under our accounting policy we treat an equipment of such low value as an expense, we actually record it as a cost of services, and now that will be the amount paid to suppliers. Let's see, I've already got it here, cash paid to suppliers, and I put it in here, and let's see if it's, yeah, it reflected here. Okay, let's move to next one. We paid trucking company 2,000 for equipment transportation to the site. So this expense is capitalized to our equipment cost based on property, plant and equipment guidance. And we simply add it to equipment acquisition. Okay, let's see if we have it here. Yeah, we have it here. Okay, transactions list. Let me see where is period 1. So I will not go into period 2 so far. Let's put some hard stop here. It's Saturday anyway. We need to have some rest to be productive. We classified that equipment capitalized cost. Now we have received a credit memo for cash payment in merchandise purchased to offset future purchases, and we recorded it accounts receivable and inventory merchandise, and that is totally non-cash, let's say it, and not applicable for direct method. No cash is involved. Now we prepaid $10,000 for the mortgage and no interest. It's important here that we have no interest because it's important. I mentioned the interest because you usually show interest in the operating activities, but if you repay just the principal of the mortgage, that will be an investing activity. That will be a financing activity. So total financing proceeds, let's call it repayment of mortgage. And I go here and I classify that as repayment of mortgage on the building. Thanks for your question, Yuri. I will answer it just in a second. Let me just finish the classification and I will answer your question about regulation of the income statement. So repayment, you see I've got a wrong sign here. That's because I use the formula with a minus. I need to be very accurate in that. Okay, I've got only 6,000 cash left. What's going on? What's going on? What happened to all my cash? Okay, we've sold 4,000 worth of inventory for 6,000 cash. And that's basically cash we got from customers. Cash collected from customers. Okay, we take this one and we send it here. Other stuff, other items are not, the other items are related to accrual accounting and they are not related to our direct method of cash flows. So we only play with the cash. And then we have trade accounts receivable, so we sold on credit and we use 1,000 of merchandise. So no cash changed hands here. And at this point we ended up with our transactions. Let's go to our cash flow statement. Let's change our period. So our increase, it is period 1. So now as we can see in other companies, we have cash at the beginning of the period. Let's see our homework. Cash at the beginning. We have 0. Why we have 0? Because we do not even have a company at that time. Then we have cash and cash equivalents at the end of the period. And let's see, let's go to our balance sheet, which we did in our homework earlier. Balance sheet. What? No, trial balance, sorry. And we have period 1 and we have 12,000 of cash here at the end of period 1. And now let's do a check. So we basically have 0 at the beginning, we have cash inflow on 12,000, and we have, we deduct what we have in our balance sheet, and we got 0. That means that our direct method cash flow is correct for the period. We are good. We did direct method cash flow for period 1. Now, Yuri has a question. If there is any regulations that establish how the cash statement should look like and when, what should include? Basically, all you need it in that guidance. It is, so basically what your statement should look like and what it should include. It should include your operating, financing, and investing activities. And you need to include a if you use direct method, you need to include reconciliation between income statement and between your net income and your operating cash flows. Regarding how it should look like, there is no law which require any particular form, but let's see. So your question, you need to look at that paragraph. And the main source of guidance is AC 230. The AC 230 does not prescribe you the exact look and the items included into your cash flow statement. It just says to you that, okay, you need to show operating, investing, and financing activities. You can use direct method to show that, or you can use indirect method to show that. You can, if you have non-cash items and you need to show some reconciliations. If you, for example, if you use indirect method, and in your income statement, I included some items related to financing or investing activities. You need to reconcile those, you need to reclass those. So it's kind of, no one tells you the order of how you want to show it. However, there is like more of a tradition, I would say. So there is like a, I would say, a typical look of the cash flow statement, and that's here. It's under the caption of format of the statement of cash flows. So that's more like a typical format. It doesn't include all the possible captions and all the possible situations, but it includes a good deal of it. So that's a good question, and there is no like prescriptive guidance about how that all of that stuff should look like. But that guidance should answer for most of your questions. Okay, let's go back to our homework. So what do we do now? We arrived at that result and we know that our direct method is correct and that we got some operating cash flow. So now let's try to build our indirect method cash flow. And that would be a bit more complicated. At that point. So we start from net income. We always start with net income here. And we take our net income from our trial balance. Yeah, let's use trial balance so far. At some point we might want to switch to balance sheet and income statement, but let's use trial balance so far. Okay, where is our direct and indirect stuff? Okay, we have 0 here. Trial balance, period 1. We are still in period 1. We have 4,000 income. We have adjustments to reconcile net income to the net cash provided by and used in operating activities. Let's just make sure that we copied captions correctly. Changes in operating assets and liabilities. And okay. Adjustment changes. Okay, let me highlight this. So our investing and financing activities will be the same under the indirect method, the same as with the direct method. I hope that's clear, but I will repeat that a few more times. So this will correspond between the two methods. And now we need to get somehow from 4,000, we need to get to 15,000, period 1. Okay, let's also call this period 1. And I will do that manually, but on a bigger scale we will have to do formulas for that too. Now we need to figure out if we had any non-cash activities like depreciation in the period which we want to adjust in our net income. If we have anything sitting in our net income that we want to adjust. So let's go take a look at trial balance. Okay, we had 6,000 revenues. We have revenue services 5,000. We have cost of merchandise. We have cost of merchandise. We have cost of services. I haven't detected any non-cash activities, but we will let's just reconcile our cash flows, indirect and direct method, and then we will play with non-cash activities a bit. Sorry, I just need some coffee to continue to function. Okay. Now, let's see. So here we have a huge list of those non-cash activities. And then we have changes in operating assets and liabilities, net of effects of business acquired. Let's go to our trial balance and see if anything changes in our balance sheet. Trial balance sheet. Yeah, we have a lot. Let's call it period 0. And we have zeros in period 0 because our company doesn't exist in that period. Okay, and on that side I had income statement mapping, and let's add cash flow statement. Cash flow. Okay, now let me copy official names for these items. I go to the guidance and I get decrease, increase in trade receivables. Okay, decrease, decrease in trade receivables. Cash received on sale. Okay, we do not sell accounts receivable. Decrease, increase in inventories. And let's go. Decrease, increase in other. Okay, let's take this one. Let's take other assets as well. What else we might have here? Decrease, increase in operating accounts payable. Yuri, do you have question on any particular transaction and its reflection in the cash flow? Maybe you got something in your mind about that. Increase, decrease in accrued liabilities. Okay, let's have it here. Increase, decrease in income taxes. We do not have, for simplification reason, we do not have income taxes, but let's do a full scope work here. Okay, so that's where we need to figure out our operating items, and we do that through a mapping exercise, and I'll have to do some double work here, and I will do balance sheet extracts. I will better call it income statement balance sheet extract, but just in case. So I will use a well-known sum-ifs formula to run that. Let's see. Net income. Let me think for a second how to compose it better. Okay, trade receivables, trial balance. Okay, I will only use trade receivables here. Let me make it visible. Okay, trade receivables, cash flow indirect. I will run, let's say, period 0 here. No, I will have to repeat all the periods. Period 0, period 1, and so on. Okay, and because on our trial balance periods are already separated, I just can use the sum-if function and not a sum-ifs function. So I only need one criteria. Okay, trial balance, period 0. I start with period 0. Okay, let me move that, and I need to fix that column so it won't move. Then I want to fix a column for my criteria, and the last column I'm okay if it's moving because I will be copying it to period 2. So what we have here, in period 1, our trade accounts receivable have increased by 5,000. If you remember from today's lectures, if our assets increase on the balance sheet, that means that our reconciling item should be negative. If assets increase, that's a negative for reconciliation. If liability increase, that's a positive for reconciliation. So imagine if situation, if our net profit for the period is based completely on credit sales. So we sold everything on credit. We didn't collect any cash. We will have some 20,000 profit, but our cash flow is 0. So we will get a positive net income. Let me, by the way, I probably need to change net income to kind of positive, because in a cash flow statement that is usually showed this way. I would say, to avoid confusion. Okay, so that was our old exercise. We do not need it now. So in our case that should be negative, it should be negative change. It should be negative change during the period. Oops. Equal minus, okay, that minus that. Okay, so we got that effect from trade receivables. Now let's see what we have in our trial balance. What more? So we ignore cash for that exercise. We use that. We have other accounts receivable. Let's go here, and we have other assets and liabilities. Thanks, Yuri. Okay, so we got some assets and liabilities. Let's go to trial balance. Okay, other assets. Let's see. We also have some prepaids. So I would basically allocate that stuff to other assets and liabilities as well. Let's go to our formula. Let's copy it for inventories, for other assets and liabilities, and that's pretty much, we have another effect. So our other assets and liabilities increase. That's why we are correcting our net income here. Okay, so what happens in our inventories? In our inventories, we got, let's see, we need to do a mapping. Trial balance, inventory, inventory. Okay. And what do we have? What else do we have? We have trade and other payables. Let's go back here. So you see, we have kind of adjusting outflow for trade receivables. We have outflow for inventories, and we have outflow due to increase in other assets. So that's where our cash went. It looks a bit different to what we have at Direct. So it says we paid to suppliers $20,000 and total operating cash flow is minus $20,000. Oh, sorry, minus 22. I can delete this at this point. Oh yeah, I will just hide it. Okay, so indirect, we have minus 16,000. And that should be the correct number. What we have in indirect? Oh, we already got minus 16,000. So that's how it can work. Let me just check if my trial balance, okay, my trial balance is 0 and everything seems to work. So basically we already reconciled the total operating cash flow by both direct method. We did direct method by looking directly into the transactions. And we also did indirect method. We also did an indirect method and we obtained the same result, $16,000 outflow. It's here. So indirect method, we see that we paid suppliers $22,000 and we collected from customers $6,000. While in the indirect method, we see that we have net income of $4,000 and we have adjustment for trade receivables, for inventories, and in other assets, and it kind of doesn't provide us much value. This adjustment doesn't provide us. They don't tell us how many we get from suppliers or paid to vendors. They just show us some adjustments. So let's now do some complicated matters. We probably still have 10 minutes left. What can we do now? Let's record some non-cash transaction. Okay, let's see where I have period 1. Period 1, period 1, period 1. We record $200 of depreciation of equipment. Debit, credit. So that's usually debit, depreciation, expense, equipment, credit, accumulated depreciation. Okay, so 200 minus 200. Okay, and we allocate that to period 1 just in case. Now we need to make sure that we have all of these in our trial balance. So first of all, equipment, let's add accumulated depreciation equipment account. We got the difference here. So now we need to go to our cost of products, cost of services, and we add here, we maintain the mapping, but we add here depreciation, expense, equipment, and we just copy our formulas here. So we got $200. If we go take a look at direct cash flow, it shouldn't reflect depreciation anywhere. Depreciation is non-cash, it's not included in the direct cash flow method. But in the indirect cash flow, you see our net income adjusted for $200. And our operating cash flow is now not correct. So what we do here, let's see what caption do they have here. Depreciation and amortization. Let's use nice captions. Depreciation and amortization. And we can go to our trial balance and we can find that expense here. Here it is in period 1. In period, since it is income statement, it's already periodic. For balance sheet you need a change between the periods, but for income statement you need a periodic expense. And so here we just go here and pick it up 200, and we basically add it back here. So we got to our 16,000 expense. So that's how non-cash stuff work. Now let's go take an example from that guidance. Let's see if I can find it. So I was able to find it by $400 in the past. FSP Corporation acquires computer equipment for $100 cash and $400 installment note payable to the seller. Okay, let's do it. Transactions list. Okay. Not bold. So what do we have? We have debit. To run it faster, I will not create new accounts for that. And also let's say, so it is installment note. So I would assume that is installment note is not accounts payable, but that just some form of the borrowings. Let's read the guidance. Should be reported as investing activity outflow and included with purchases of property, plant and equipment. The non-cash investing and financing transaction should be disclosed. Okay, it was actually 500. So it was, so debit equipment 500, 500, credit cash 100, credit, okay, let's use just trade payable. No, there is an issue why we cannot use trade payable. Let's just make sure. We say that this is a long-term debt. Let's go to trial balance. Do we have any long-term debt here? Mortgage. Yeah, I have to do a lot of work on the spot here. Okay, so let's put it into our long-term debt, other long-term debt, and it will be minus 400 credit, and it's all period 1. So now, because it was seller financed debt, we have an interesting issue in the standard. When we finance some property acquisition by the seller, we only reflect our actual cash outflow for that property as investing activity, and other part will be non-cash. And let's go here and let's allocate it. So we need to have $100 cash outflow. But what problem we have with investing activity, where it is total investing equipment acquisition? Okay, minus 12,000. So that should work. Sometimes we will have to change formulas. So in our case, we have somewhat universal formula. Okay, 100. Let's see. Okay, 100 added here. And we have 11,900. And we also need to have an additional item for cash flow which does not participate in the reconciliation. Let me open it in the new window. So here we have it, supplemental cash flow information. We got an item which we have to include into supplemental cash flow information, and it's cash paid for interest net of amounts capitalized. We haven't done such, we do not have such. Cash paid for income taxes, we do not have such. And then we have non-cash investing and financing activity. And the one we got is okay, it doesn't really list it, but I would say, okay, do we have here construction payables? We do not really list it here. We can basically call it seller okay, and we probably can kind of map it here. Let's see. I'm not sure about the sign. Let's see what AMC did here. Interest, okay, interest paid, income taxes receipt, interest investment in NCM, construction payables. It's probably just reconciliation. So they show positive, they show that kind of stuff as a positive. So I would also probably show that as a positive. Okay, let's see what happened. Nothing should have happened to our operating activities. So they are still, our operating activities are still here. Okay, so probably one last thing for today. We are running out of time. We will continue working on that through homeworks, and we will get some more complicated transaction, I hope. So the last, probably two last things, not the one. I was too in a hurry. Here is another transaction. It is the same description, but we got a borrowing on that transaction from the third party. So third party financed that transaction. And it's interesting that in that case, so basically all of the transaction will be the same. Let me paste values. So the all numbers, all debits and credits will be the same. But we will have different cash flow impacts. Our equipment acquisition will be here, and it will be with a plus sign. So I don't really know. I don't really know how to reflect it correctly in the cash flow. Let me think about it. Yeah, I basically cannot reflect it correctly in the cash flow. So I need to show 500 in my cash flow with the current formula setup. I will call it equipment third party financed. Okay, so that complicates things. You cannot, with cash flow you cannot basically have some universal approach to mapping. That's strange, it doesn't want to look up anything. How could that be? Equipment third party financed. What's wrong with it? Okay, I look into FF and I pick it up from NN. So FF, yes, NN, yes. Did I copy the right formula? Some ifs minus some ifs. Yeah, I have no idea why formula doesn't work. So for some reason my formula stopped working and I cannot figure out. Let's do it easier. Okay, equipment acquisition. What? Okay, this way it works. So for some reason my formula stopped working. Let's see. Might it be due to some nature with these numbers? What am I missing here? Oh, I'm missing the period. Okay, now it is clear. 500. In that case, we show full value, and we also show acquisition of financing. Let's add it here, and we should show $400 cash inflow from financing. Let's call it third other Okay, Other long-term debt, third-party financing. And let's make sure that we use the same caption here. Basically, by using this approach, you can solve all your cash flow questions. When you know the right numbers for your balance sheet, for the cash numbers on your balance sheet, when you know the direct cash flow method, and then when you do indirect, you can practice any difficult situation on your indirect method. As you see, what we didn't impact the cash inflow, operating cash. So let's now do some complex stuff with interest, which will impact our operating cash flows. Okay, we accrued 1,000 in interest for mortgage and paid 200 for interest. So debit would be interest expense, credit cash. So interest expense 1,000, credit cash 200, and everything else will be accrued interest, mortgage minus 800. I'll copy period in order not to miss. Now I'm missing that stuff in the trial balance. Let's update trial balance first. Oh, I've already got interest expense. Let me just use interest expense, just not to overcomplicate things. Okay, it's 1,000. It's already in trial balance. Now I do not have accrued interest here. Let me add it here. Let me add it here. I will put it to bank loans current. Okay, here it is, our trial balance balances. So now, what is the requirement of direct cash flow? We have a requirement to show interest paid in the direct cash flow. So we take it from here and we add it to here. It's still included in the formula. Okay, interest paid, and let's go to our transactions list. So it is clear what was paid. It is what was paid with cash. So we got it here, interest paid, and based on that movement, our direct method cash flow, operating cash flow, is now different. Is now 16,200 outflow, and we need to do something with our indirect method. So indirect is now 17,100. That's because we included 1,000 of expenses was included in income. So our income decreased by 1,000, and we need somehow to adjust for non-cash item, which was interest accrual. So let's see if we have such caption here. Decrease income taxes, accrued liabilities, income loss on disposal of property, non-cash for exit, deferred inventory obsolescence, provision impairment, share amortization of debt issue costs, accretion of discounts premium on issued debt securities. So I do not see that interest accrual, and I wonder if I should adjust for it in operating assets and liabilities, or if I should call it just some non-cash item. I will probably let me try. Accrued interest. Let's check AMC, if we can find any guidance in the AMC. 1, 2, 3. Hopefully my microphone is still working. Okay. Deferred rent, receivables account, accrued expenses, and other net amortization of net loss on extinguishment, impairment of long defined depreciation, deferred income tax, loss and amortization of net discount on corporate, deferred financing cost to interest expense. Okay, I cannot find definitive guidance on that question. I will add it to my questions file. Where to put accrued interest on indirect cash flow? So I see that some non-cash interest charges are reconciled in the operating cash flows in the non-cash charges rather than in the changes in working capital, change in assets and liabilities. So I will also do it this way. Let's see what we need to put. I will call it non-cash interest accrued, but I will highlight it by yellow, and I will put a comment. Check on presentation. Okay, so I will check on that presentation, and now I need to figure out the way to how to get it from trial balance. And from the trial balance, I can see that it's here. It's accrued interest. So I map it to here, and it's a liability. And let's go to indirect. Let's get it from here. So based on the way I calculated it, I actually might have put it here, but I decided to put it there. And since that is a liability, the increase in liability should be a positive number in our reconciliation. So now our operating cash flows match. Okay. So that is all of the practice for today. In the evening, there will be no practice session. You can run that session. I will probably prepare homework, but there will be no Q&A today. The next Q&A will be Wednesday, and I will communicate via email and other means for that. But hopefully that was a good exercise for you. When I was working in Big Four, we actually model the cash flow sections this way. When we have a cash flow question or issue, we read the guidance and we tried to model it with the help of spreadsheets, with the help of some simple double entries. So that should be a good exercise for you. On the job interviews and stuff like that, you can get the questions. Okay, where is the depreciation in cash flow? Why is depreciation in cash flow? What is the difference between direct and indirect cash flow methods? Are financing cash flow different depending on the present preparation methods? So you can get a bunch of questions on the job interview on cash flow, and hopefully with knowledge of the guidance and some practice, it will be easier for you to answer those questions. As for today, thank you, have a great weekend, and see you next Wednesday. Bye bye.